cash or accrual-based accounting? Which is best for your nonprofit? Here's the pros and cons of each system and tips to help you find the right fit for your nonprofit in your current stage or season. Hi, I'm Teresa Clark, a seasoned CPA with over 25 years dedicated to serving 501c3 nonprofits. With experience as both an internal CFO and an external auditor for nonprofits, I bring a unique perspective to your financial journey. To learn more, jump in and explore my website at teresaclark.com. Choosing an accounting method isn't a one size fits all. Just like choosing a path to get to my grandmother's house in Colorado isn't always the same. Determining which route depends on variables like weather, construction, and the priorities of our journey. Are we going for fun or do we need to get there right away? Evaluating the options and then committing to the route is what it takes to get there. In that same way, choosing a nonprofit accounting method depends on the route you want to take. Here are some important variables to consider when making this decision. Cash basis accounting. How does it work? Well, it records transactions when cash changes hands. Revenues are recognized when the money is received, and expenses are recognized when the money is paid. Some pros to this method is the simplicity. It's easier to understand and implement. Also, immediate tracking provides a clear picture of cash flow. But some cons to this method are it's less accurate of a financial picture. It doesn't account for those receivables and payables, and it can give a skewed view of financial health. Another con is limited insight. It might not reflect the true financial position if there are significant amounts of outstanding funds that either have been earned or owed but not yet collected or paid. The other method is the accrual basis of accounting. So how does this work? Well, it records revenues when they are earned and expenses when they are incurred or owed, regardless of when the cash is exchanged. Some pros to this method is it's an accurate financial picture. It provides a more complete view of the financial status as it does include those receivables and payables. It's better for planning. It facilitates budgeting and financial planning by reflecting all earned revenue and incurred expenses, regardless of whether the cash has happened or not. But some cons to this method are its complexity. It's obviously more complex to implement and maintain. Also, it's cash flow management. You can't use the bank balance to determine the cash flow. You'll need to implement additional tools like budgeting and cash flow planning tools. So which one should you choose? Well, I'd say in general for smaller nonprofits, the cash basis might be sufficient if the organization has simple transactions and really wants to keep the accounting straightforward. But as you get larger or you have more complex revenue sources, the accrual basis is often preferred because it provides a more comprehensive view of your financial health and it complies with generally accepted accounting principles, GAAP or GAAP for short, which is especially important for organizations that get significant funding from grants or contracts, especially if you're going to end up needing to receive an audit. An audit will have to be done on an accrual basis. All right, well, I want to inspire you to take some action with what you've learned today. Many nonprofits are required by their funding sources to use accrual accounting. Know if that applies to you. And it's always a good idea to consult someone who specializes in nonprofits to determine the best approach for your situation, whether you're changing or just making that decision for the first time. And additionally, I'll say that it's a good time to evaluate your accounting software. Yeah. What capacity does it have to support the accounting method that you choose? If you need help getting positioned for growth, I want to invite you to consider our fractional CFO services for more strategic decision making. Until next time, I'll see you then.